Okay, so the question was, if you have money in an IRA, what would you advise rolling it over into, I think they used Unchained, where you can actually take your pension, your retirement fund, you can roll it over into Unchained. They do all that for you and put it into Bitcoin. I don't know if I think it's self-custody Bitcoin, but it might be ETF as well. I'm not 100% sure. I'm in Canada, so I'm not overly familiar with Unchained. But from what I understand is you basically take your pension, they roll it into a Bitcoin IRA, and they hold the key to it, essentially. So would I advise it? Absolutely. But for people who don't want to do that, because obviously there's going to be quite a large fee attached to that for them to do that, for them to perform it and to help store your Bitcoin. So I'm more on the team of kind of do things yourself for the most part, unless it's a reasonably priced one. But from what I've heard of Unchained, and again, I've never used them. I'm in Canada. I do not have the ability to use them, I don't think. But from what I've seen of their fees and their setup costs and everything like that, I just think it's better off at this point to be buying Bitcoin with that. So unless you can find somebody for a very reasonable price to help store your Bitcoin and help do that for you, I would kind of do it myself. Maybe bad suggestion, maybe bad advice. This is financial advice after all. But the other option you're going to have there is you can actually just work with a financial advisor to do it. And they're not going to be taking quite as high of a fee. They might charge a little bit off the start. And obviously they'll be taking a fee off your Bitcoin ETF. But that might be the play. So what I'm going to be talking about here today is one of the financial advisors that I work with. Great guy. Let me just find the email here that he sent. This was from a while ago, and I think we talked about this before, but I wanted to take it into a little bit more detail. So let me read this, because I think I've read this before. It was like half a year ago now, but it's very relevant still. And so this is from a financial advisor, a local one here that I work with. And if you are somebody who has a bunch of your capital still in the old system, then reach out to me. I'll put you in touch with him. We'll have a conversation. We'll set up a call, and we'll move as much as possible from your pension or your investment fund into Bitcoin or Bitcoin related companies. So this is what he sent. It says, here's something interesting from the mosaic I sent you yesterday, which I'll bring up too. But it says, if in 2013 you had $6 to invest and you invested equally in the US equity, high yield bond, aggregate bond, emerging markets, commodities index, and gold bullion, you would have $9 after 10 years. So you went from $6 to $9 in the strategy that most advisors would tell you to go into. If in 2013 you added one extra asset class, Bitcoin, and you divided your $6 equally among the 7 asset classes, you would have $41 after 10 years. If your original Bitcoin investment went to zero during this time, your original $6 investment would be $8.50 after 10 years. Therefore, the addition of Bitcoin to the portfolio increased the original investment by 355%. And if it had gone to zero, it would have only decreased the 10-year value by 6% from $9 to $8.50. Nobody constructs a portfolio by equally weighing 7 asset classes, let alone 14% in one security, even for the riskiest investor. This was just for ease of illustration, but nonetheless, the results cannot be ignored. The upside potential. So this is the key here. And this is what I want to talk about today. This is the key. The upside potential was 355%. And the downside risk of Bitcoin going to zero, not just going down a bit, but going to zero, was 6% over 10 years. So I'm sure if you've been listening to Bitcoin conferences, if you've been listening to people within their traditional financial markets talk about Bitcoin, Greg Foss, Larry Lepard, who else was talking about this the other day? Scaramucci. Is it Scaramucci? I think so. The Mooch. I think his name's Scaramucci. But they talk about the greatest asymmetric trade in history. And essentially what that means is you have a shitload of upside, of potential, and you have a very low downside. That's what I make of an asymmetric trade. There's a very high upside and very low downside, and that's kind of what Bitcoin is right now. So I want to show you, where is this? How can I hide this? I don't know if we can. Open in new tab. There we go. God, I'm smart. I'm new to computers. I've only been using them for 20 years. From our computer class back in high school, computer class. So this is what he's going off of here. This is the Bitcoin performance compared to major asset classes. This is the chart he was talking about. And so what I did here, using this, is I kind of created my own little spreadsheet, which I'll share. Just to go through a real example of this with real numbers. Okay, so this is we got Bitcoin, we got the S&P, we got the high yield bonds, and we got emerging markets. Hopefully everybody can see that okay. So all this information was actually taken from that graph that he sent me, graphic. So I took the last 10 years here, 2014 to 2023. I left out 2013, which had a 5,000% return for Bitcoin. So we left that out just for, so it's not too crazy. So I got a couple options here, and he kind of went through this in a very simplified way so we went from $6 to $9 in traditional, and then we went from $6 to what? We went from $6 to $9 with the usual mix, and we went from $6 to $41 if you included some Bitcoin in there. So this is what I want to show here. This is if you had $1 million back in 2014. You didn't put any in Bitcoin. You had 40%. I kind of use like the traditional 60-40. I think this would what it would be. So 40% in the S&P, we got 40% in the high yield bonds, and we got 20% in emerging markets. So this obviously could differ. I just wanted to keep things fairly simple for illustration purposes. So you start off with $1 million in 2014, and at the end of it, you have a total of $2 million. So pretty good. You had a gain of $900,000 and 83% gain. That's after 10 years in your traditional, this is actual results, historical results, in your traditional financial portfolio. Pretty good. Pretty good. 80% up. I think most people would take that. And this is compounded too. So that's a pretty good return, I would say. Let me just check on something quickly here. Sorry. I just want to make sure I'm not missing anything, because I was writing down some notes yesterday. All right. We're good. So the only thing that I did want to mention here, and we're probably a little bit too late for this, but it's okay. I was calling this episode, This is Financial Advice. I wanted to put the full show on YouTube today, just so anybody out there who has any sort of money in the traditional markets, I think this is going to be a real eye opener, almost as much as the house chart there, comparing Bitcoin and fiat prices. But keep in mind here that this is based on actual data. This is not my opinion on anything. This is financial advice because it's just logical advice. But at the same time, I wanted to use 10 years because with Bitcoin, if you're putting any sort of money into Bitcoin, you want to be very long-term focused. Contrary to what the media will tell you, what the governments will tell you, there's not a whole lot of people in Bitcoin who are here to cash out back into fiat. So if you're buying Bitcoin, you're going to be here for at least 4 years, I would say, if you really want to get the full potential of it. But if you want to, I went 10 years. I think a lot of people will probably hold it for 20 years, 50 years, forever. But we'll use 10 years for that reason, because we want to be thinking very long-term here in Bitcoin. So that's the first option. That's if you just completely ignored Bitcoin, you still would have done pretty good. You would have had $913,000 gain, 83%. So this next one here is if you would have allocated 2% into Bitcoin. Chrysler did like a split between them. I thought the 2% was very reasonable, especially before the ETF showed up. I think that 2% Bitcoin was very conservative, very probably high risk for a lot of people. So 2% Bitcoin here. I took it out of the high yield bonds, dropped it down to 38%. So we got 2% Bitcoin, 40% S&P, 30% high yield bonds, and 20% emerging markets. So just with a 2% allocation, we went from a $900,000, and this is what we're started with here, $8,000. Well, we started with 20, but in 2014 we lost 56% of it. So we started with $8,400, and it went all the way up to $726,000 after 10 years. So with Bitcoin at a 2% allocation, you would have had 150% gain versus 83% gain, which is great. I mean, I think anybody with a brain would take that with a very low percentage, very low risk, 2%. And that's kind of what I want to highlight here. I did one for 5% as well, which is this next one. So this is a little bit more risky, I think, again, especially after the ETFs or before the ETFs legitimized it a little bit and made it very easy for people to hold Bitcoin. So this is at a 5% allocation. After 10 years, you had a 2.6 million gain for 253% upwards. So that's with a 5% allocation to Bitcoin. But this is the thing that I wanted to show here. So at 5%, I think that that's a fairly reasonable amount. But this is the highlight here. This is kind of what I want to focus on. So you had $1 million, you put 5% into Bitcoin, 40 into stock markets, S&P, 35% into high yield, 20% into emerging markets. So this is worst case. This is, as you can see here, I zeroed out Bitcoin. This is assuming that after 10 years, you had a whole bunch of highs, a whole bunch of lows. And in 2023, Bitcoin crashed to zero. They found a way to shut it down. The Bitcoin network was hacked. It went to zero. So look at this, though. Here's the very interesting part. You still, even with Bitcoin going to zero, you still had a $867,000 gain for 81%. And if you just had Bitcoin's, you didn't put any money in Bitcoin, you had an 83 or 84% gain. But if you bought Bitcoin and you lost it all, you still had an 82% gain. So that's the asymmetric part of Bitcoin here. That's the part that I wanted to highlight. And so this is if you put 10% into Bitcoin back in 2014. You would have had a total gain of 4.4 million USD for 432% upside. And the crazy thing about this is we've actually already gone through 2023 and Bitcoin did not go to zero. So whoever was ballsy enough to put 10% in their, only 10% too, back in their portfolio back in 2014 would have had a 432% increase through that time. So again, the part that I really, oh, there's Arnie. Hello. The part that I really wanted to highlight there was the upside. The upside versus the downside. And that's what I really want people to understand. When people say it's the greatest asymmetric trade in history, that's what they're referring to. You have an upside of 432% gain if you had done it. and a downside of, in this case, 3% downwards with a 2% allocation to Bitcoin. So I think that once people understand that part of it, like people see Bitcoin as this really risky asset that could go to zero, could be a Ponzi scheme, could be controlled by the government. But at the same time, if you're not willing to put in that for the upside potential there versus the downside of 3%, I think that that's very poor investing. And that's why I titled this is financial advice, because it's just logic. And the other thing you have to keep in mind about this chart and this graphic here is that this is historical. So this has already happened. And there's a chance that Bitcoin does not perform as well as it did in the future as the last 10 years. But you also have to keep in mind here that all of this data was pre-ETF. And I'm under the impression, my theory is that the world, and especially the Bitcoin world, changed forever after January 2024, after the Bitcoin ETFs were announced, because all of a sudden the entire, before this, none of the capital could get into Bitcoin. They were locked out of it. But now that we have the ETF, and we're still in the very, very early days of this whole thing, where we hear, who is the bank that announced last week that they're going to be selling to their clients now? Morgan Stanley? Anyways, we're at the very, very, very beginning of this whole thing. But now the big capital, the big money, the institutions have access to Bitcoin. They can buy it easily without any friction there. And so all of these figures here were before that, before the big money could get into Bitcoin. So, I mean, I'm not going to say that it's going to go up in the next 10 years, but it's probably going to go up in the same relation, if not more. I would expect a lot more because of the big money being able to come into Bitcoin now. So I would say, a couple things. If you have any friends or family members who are thinking about getting into Bitcoin, but they're not really sure how much to put in, how much risk is there, consider sending this video. And I'm going to clip it after the show, but consider sending them this video. And as we've talked about before, I feel like most people trust people on a screen, whether that's their TV, phone, whatever, trust people more on a screen than their own family members. So consider sending it to your family members or your friends or your parents. But the other thing there is consider sending it to your financial advisor. If you've had conversations about Bitcoin, and if your financial advisor is able to watch this video and still advise you not to hold any Bitcoin, then I would run away as fast as you possibly can from them. That's why I titled it, This is Financial Advice. I have no issue telling people, start with 2%, start with 5%. I would suggest more based on where we are right now and what's coming. But you have to just have some allocation to it, because there's a pretty good chance that we're going to repeat this in the next 10 years or go higher than that. Does that make sense? I don't know. There's not a whole lot of chats happening right now, but maybe it's because I was dialed into that. But does that make sense? So the main highlight there for, again, is the upside. 432% upside, 3% downside. That's Bitcoin. Pre-ETFs. And since then, since we saw the last figure there in 2023, BlackRock, Fidelity, and the other ETFs have swallowed up almost 2% of the total supply of Bitcoin now. So you got Saylor with 1%, you got the ETFs with 2%, you got a whole bunch of Bitcoin that's been lost. At some point, you have a whole bunch of psychopaths like us who are never selling their Bitcoin, regardless if it went to $1 million, $1 billion, whatever that is. We're not selling Bitcoin because we know what it's worth. And we know what the other money's worth. And yes, this is Greg Foss, who kind of coined the phrase asymmetric trade, which is huge upside, very low downside. But Rock and Roll says there is only one certainty. Fiat will continue to get debased forever.